Hello, guys, and welcome back to another post-market analysis of Nifty and Bank Nifty. So here we are in a Nifty chart. So let's first deeply analyze what this chart has, what this price action has to offer us in terms of learning. And after this, we can shift to our daily charts and see how both Bank Nifty and Nifty are looking on our daily time frame, so that we can be prepared for the coming days. Uh, or else let's start with the daily time frame only, and then come back to the post market analysis of any one of this Nifty or Bank Nifty. So here we are in a Nifty's daily chart. As you can see, it's a consecutive fall, it's continuous fall. Okay, so after this green candle, so 1 2 3 4, for the 4 days we are seeing continuously momentum going towards the downside. And yesterday in previous video we discussed that this one green candle cannot change the turn the direction in the opposite way. That is because this is just one small green candle there, after which you need to see some strong bullish pattern if you want to change your weave towards the Nifty. Okay, so here exactly like we have discussed earlier, this green candle didn't put a stop for the falling momentum. See, it is continuously falling from there, and now we are at this place. So if you notice today's price action, see the real body size of today's candle, okay, apart from the wicks, it's a good fall. And in a moment we'll see why. In fact, there is only one single candle which led us to this fall. Okay, we'll talk about that in our intraday time frame. But if you closely notice, see, earlier we had a chance to draw this trend line rising towards the upside. Okay, so it's a upside trend line, and if you notice, based on these two reactions, we have drawn this. That means this is still a tentative trend line. We need to we need to see another reaction somewhere. Only then it can be called as a valid trend line. So now what happens if you see a very strong, you see, first of all, this is a bearish engulfing pattern, but this is already in a downtrend. So what you should notice here or pay attention to is not this bearish engulfing pattern, but the location. Okay, so you need to wait and see. Now that this candle is almost touching this line, now you need to wait and see if you see any uh, bullish candlestick pattern here. That means that it has taken support from this tentative trend line, and this trend line itself is going to, there's a chance for it to play a may role, important role. So you have to wait and see for the next one day. So suppose if you see a good hammer here, okay, touching this line, that means that it's a good reversal sign. So from there you need to we can expect little upside momentum. And it's a similarly, if you see a small green candle or a red candle here, that will in turn form bearish, it's going to in turn form inside candle formation. So even from that inside candle formation or a harami pattern, if you see a breakout towards the upper side, then it's a good chance for us to expect Nifty to reach these levels again. But for that, we have to wait and see how it's going to be in the next coming days, tomorrow especially. Okay, and let's quickly check the price action of Bank Nifty on a daily time frame. So here we are in the Bank Nifty chart. So it's looking similar. Okay, see, the candlestick pattern is also looking similar, and this momentum is also similar. But the thing is, it's not yet close here. I mean, we are not yet close to this line. Okay, so if once Bank Nifty, if it's touching this line, if it is making any effort to see rejections from this blue color trend line, then we may expect the same upside momentum that we are expecting in the Bank Nifty, but that's not confirmed yet. You need to see a strong candlestick pattern forming at this trend line. Okay, but for any reason, if it fails to cross this, then this is going to be the major support area for the Bank Nifty and also for the Nifty. Let me change the chart. Okay, yeah. So even here, if for some reason if it's crossing this and if it is coming towards the downside, then you need to wait and see the reaction here at this zone. Okay, so I'm coming back to the bank nifty chart. So that is how it is. So it's okay. We are in a downtrend, that's for sure. We are in a short term downtrend, so let it react. Okay, if you see any reactions from there, then there is a good chance for both bank nifty and nifty to rise again to these levels. But for any reason, if it's breaking down, then you need to wait and watch reactions there. If it's taking support there, then we have to take certain calls, and if it's further going down, then we have to shift our perspective according to uh, what it has to offer. Okay. Mm, so that's it about Nifty and Bank Nifty on a daily chart. So now let's clearly understand about the fall that both this Nifty and Bank Nifty has given us. So let's start. Okay, this is the Bank Nifty chart. We can either see Bank Nifty, or we can also see Nifty first. Let's see Nifty first, because a Bank Nifty, a candle like this is at least expected every now and then, but in a Nifty, this is very rare. Okay, so let's start with the Nifty chart. So here to start with, okay, excuse me, yeah. So here we, to start with, Nifty has opened at 22,228 levels, and the first candle, if you notice, it has seen certain reaction from the bottom. Okay, so now this, you might be wondering what this is about. Okay, or what this zone is. That is nothing but the zone what we have initially had this resistance line, but after this candle's finish, we can see the bottommost wick portion of it. Okay, so we just have to drag this. Okay, so I've just readjusted this. So earlier it was like this. Okay, after touching and forming this, and a little moment towards the upper side, then you need to correct it like that. Okay, that's it. And next, we have simply marked this level. Okay, this is another zone. If you notice, this zone is important because earlier it was support. Okay, couple of days back it was a very strong support. Now there's a chance that it may act as resistance. And now if you notice from there, you have seen a red candle there. You have seen a red candle here, because see, if it is so positive, okay, this green candle body is so positive, it is average size, and this candle is little larger than that. But immediately after that, at this resistance area, you have seen this red candle. It would have been even more bearish if you had have seen a close under this area. Okay, if you had have seen a close under this area, but then that didn't happen. But still, okay, if you had taken this risk, okay, because the risk is very small here, your risk versus reward ratio is playing a very good role here. Okay, if you play that risk, okay, look at the size of your reward. It's almost 7.9 times to your risk. Okay, and this worked beautifully. Okay, and this worked beautifully. If you have if you had that doubt, okay, and if you have jumped there, okay, see, this was a result in the next 5 minutes, which is pretty good. And after that, in fact, it has continued. Okay, if you're trailing, it has even come down to this point, and it has even come down to this point as well. Okay, but even if you're considering it till there, okay, look at the kind of risk versus reward ratio. So earlier it was 7.9, and then if you're trailing your target till there, then look at your risk versus reward ratio. It's 14 times. It's 14 times. Okay, so sometimes, okay, sometimes when there is an opportunity like that, you should be able to grab it. Okay, and look what happened after that. Okay, this is a close. Always remember that even close of every day's level is also going to act as a support or resistance levels. But look what happened after this small momentum. Okay, so initially it has gone there, and from here it has again gone here. Okay, so at this stage we know that this has to be our support area. Okay, so what we did is just drawn a simple line there, waiting to see if this is breaking down. Okay, so from there, if it's breaking down, okay, then it's going we could have seen a further fall, but it sustained. Nifty sustained at that area. Your first doubt should come from this doji candle. Okay, so here, this doji is the first sign that Nifty throwed at us. Okay, and your stop loss would be below this. Remember, it's not just a crossing. You have to see a close below that level. But frankly speaking, dojis in a strong downtrend, okay, we could not, they'll not act as a strong reversal sign. So you need to wait for some more uh, confirmation, and that confirmation has come in the form of this 1025 candle, which is a hammer. Okay, so this candle is a, it's a, sorry, okay, so here this 1025 candle is a hammer. Okay, so it is giving us a second clue. We're talking about this candle. Okay, so first thing is the location. Okay, this line. Okay, this line, this zone is what it is a, it is a support area. Okay, so we have a location, and that location is this line. Okay, and you have your hammer there. Okay, that is your, you have your location, and also you have your uh, hammer there, which is a second sign coming after this candle, which has initially has given us a chance, has given us some sort of a clue there. Okay, so this doji, okay, it's a early clue there. Okay, so all these points, if you are paying little attention towards this level, all these points are acting in your favor to go towards the upper side. Now the only thing what you have to check is your risk versus reward ratio. Your risk should be below that, okay, and your reward is exactly there. So you have a good 1.78 times of reward to your risk. That means that even this trade worked beautifully. Okay, this trade worked beautifully. So here in this scenario, sometimes what you can also do is, see, you have entered there aiming that that's your target, but see what happened is, from there you have again seen a pullback. You have again seen a pullback, and next time when it is going towards the upper side, if you want to be safe, your target should not be that. Your revised target should be this. Okay, so your revised target should be that area. So somewhere here you should have taken an exit. So even this has worked beautifully in today's market. So we have a couple of trades that could have worked in your favor. One is this, and one is that. Now let's see what happened after that. So if you're trailing this, so let's say for example, if you're trailing this when the market is at that level, and then your stop loss, if you are correcting your stop loss to this level, okay, and then aiming that as your target. Okay, now in this case it has achieved this. So now you could have changed this as your stop loss now. Okay, that means you're trying to trial this momentum, and from there, if you are keeping that as your next target, okay, and see, even that work, and after that this should be your next target, even that work, and while it's going towards the upper side, it again came back. So when you are here, okay, let's assume that you have exited there. So one, you could have taken an exit there, or you could have taken an exit here if you are trailing your stop loss. And see what happened here. See, earlier this was an important level, right? This was an important resistance area. So from there, you have seen a breakout and also a confirmation candle there. And now, okay, this is a true breakout. You need to see this follow through candle after that. And let's see about the risk. Okay, so that's your risk and that's your reward. So in this case, you again have your risk versus reward ratio as 1.87, which is good. And even this worked, even this could have worked for you. Okay, so of course there was some sideways momentum here, but you have not seen any close below that level. Okay, so again, waiting, having that patience would have paid you beautifully all the way till there. Okay, so even this was really good if you would have traded. Okay, this was this would have given you a beautiful opportunity there. And let me tell you what this area is. If you simply, scroll your chart towards the left, here you can see that this, okay, this pullback that you are seeing, okay, that you have seen previously, okay, is now acting, that level is acting as resistance area, that level which worked as a resistance couple of days back. And look at the momentum here. Okay, so here again, okay, here again, okay, there, if you are taken an entry there, because you have again a good risk versus reward ratio, okay, your risk would have been above this, close above that level, and your initial reward could have been this level, it's more than 1.8, and from there you could have trailed to this level. Okay, and then see, if you were trailing, okay, then you had a beautiful chance. Look at this candle. Imagine, okay, imagine if you are in this candle for the whole 5 minutes. Look at the kind of momentum. Look at the kind of momentum there. See, earlier here it was a good chance, and here it has. All you have to do is wait, and you should be ready to read what's market's throwing at you in the form of candles. See, it has given us this clue. Okay, so forget about this big red candle. Okay, even this momentum, okay, even this momentum is pretty good, right? It's a decent move, it's pretty good. Okay, and even this momentum, okay, if you had this momentum, even that's good, right? Okay, so that's it. See, after that, see how far it has gone. Here it has seen a, see, here, see, earlier this is support line, right? So let's extend that, and you have seen a break down towards the downside, but you haven't seen a confirmation candle. Now if you want to take a trade there with this as your target and with this as your stop loss, do you have a good risk versus reward ratio here? Now you tell me, do you have a good risk versus reward ratio there with this as your target and this as your stop loss? No, right? So you should not worry about it. Okay, but again, where was the chance if you want to take a trade? See, it is, see, by then you are almost till the last hour of trading, but you see why it has reacted so sharply there. What's this blue line? Okay, let me, okay, it's all okay, let me change the color of it to some dark color. Okay, let me tell you what that this line is. This line is coming from our daily chart here. You see, that line is coming from your daily chart, where we have taken these 2 points as reference. This is one and this is two, these 2 points as reference, and we have drawn a tentative trend line, and that is the point where exactly Nifty got reacted. Okay, so I hope you have understood something from today's post market analysis out of the price action of Nifty. Okay, even the Bank Nifty is pretty similar. You can watch it, but just to highlight, what I'll do is, see, initially that was your resistance at this time. Okay, it has reacted for the second time. It has reacted for the third time, and finally, when you are there, okay, from there you have seen a fall, but here you don't have a good risk versus reward ratio like what you had in your Nifty chart. See, that could have been your first target, or this could have been your first target. Here your risk versus reward ratio is below 1, so you should not play any trade where your risk versus reward ratio, you're risking more to get less. Okay, basically you should not encourage such trades there. Okay, but another way of looking at it is, you could have also drawn a beautiful trend line here. Okay, a beautiful trend line there. Okay, first you would have drawn like this, but after this reaction you could have adjusted it like that. Okay, so now this becomes, okay, that's one, this is two, third time when you are there. See see the momentum. Okay, but here, as we discussed, if you are seeing that as your target, there is no good risk versus reward ratio. Okay, so that's it, guys. That's it for today's video. Hope you have understood something from today's video, and see you in our next post market analysis video. Until then, happy trading, and if you haven't subscribed to our channel yet, please consider hitting that subscribe button. Thank you so much.